And welcome back. Contracts to buy existing houses in December increased for the first time in 7 months as mortgage rates decreased from the highs we saw in late October as well as early November. Additionally, there's been an increase in the number of mortgage purchase applications as of late, as well as a number of new home sales in the US. So, is this a sign our housing market has bottomed out and is starting to stabilize? Or is there more to this story? In today's video, I'm going to share all the details with you guys. And by the way, before we get started, if you guys are looking for a real estate agent referral, then check out that link below, which is homeandmoney.com/Jason to get started today. And with that said, let's begin today's video, which by the way, this video is my 700th video that I posted on YouTube. So thank you so much for all your support over the years. So let's go ahead and dive right in. This first report I want to share with you guys today is actually from the National Association of Realtors regarding their pending home sale index based on contracts being signed between buyers and sellers that was just posted on January 27th, which is today at the time of this video. Speaking of timely updates. So here's what they had to say, and here's their headline. Pending home sales increased 2.5% in December, ending a 6-month decrease. So pending home sales improved for the first time since May, up 2.5% from November. Month over month, though, contract signings fell in the Northeast as well as the Midwest, but actually increased in the South as well as the West. Pending home sales declined in all major regions, though, compared to 1 year ago. So here's a graphic showing the changes on a month-to-month basis. Again, their index, which is, of course, is an index based on contracts being signed between buyers and sellers. That increased 2.5% on a month-to-month basis. It increased by 6.4% in the West, up by 6.1% in the South, but it decreased 6.5% in the Northeast and declined slightly by 0.3% in the Midwest. Again, these are month-to-month changes compared to November 2022. So here's some information I want to share with you guys because the big headline is that pendings increased 2.5% compared to 1 month ago. But in today's video, I'm actually going to take a deep dive and share how that compares to previous years because the big decreases compared to 1 year ago is something we should be definitely following, and also compared to prior years as well. So again, their index, which is what they're calling their pending home sale index, or their PHSI, increased 2.5% on a month-to-month basis, but it declined by 33.8% on a year-over-year basis. And look at these huge decreases compared to 1 year ago. Each of these 4 major regions declined by over 30% compared to 12 months ago. And only the big increases on a month-to-month basis were in the South as well as the West. So the index right now at 76.9%, which by the way, this is a seasonally adjusted annualized rate here. Their index is at 76.9%, a slight increase compared to November, which by the way was revised upward lately. They increased it slightly up to 75 for November. So one more thing I want to share regarding this table right here is that the current levels right now at 76.9 is well below 2020 through 2022. Their index was actually over 110 both in 2020 as well as 2021. And in 2022 as a whole, it was at 91.9, well below the 76.9 that we're seeing right now. So here's a very important part of today's video because I'm going to be sharing how their index regarding contracts being signed, how that compares to years past going back to 2000. So a really important kind of metric we should be following here. So if you guys recall from my video from 1 month ago, I recorded, or actually I didn't record, I posted that excluding the onset of COVID back in April 2020, when their index was 71.6. Back in November, that was an all-time record low for data going back to January of 2001. The lowest levels since January 2001, excluding April 2020, when we had stay-home orders across much of the United States. So their index at 75, which again was revised for November upwards, still at 75. That was an all-time record low going back to January 2001, excluding April 2020. At that time, that was also the 6th consecutive decrease in contracts being signed across the United States and declined by 36.9% on a year-over-year basis. Let's look at December though, because in December, of course, it increased by 2.5% compared to November, but it declined by 33.8% on a year-over-year basis here. So based on my analysis of the National Association of Realtors data here, which by the way, their data is these two columns right here, based on my own analysis here, excluding last month, back in November, as well as April 2020, 76.9 is the lowest levels since June 2010. Back in June 2010, their index was 76.4. But for December, it's at 76.9, which is, you have to go all the way back to right here to see the lowest levels, which obviously this is more COVID related back in April 2020. But you have to go all the way back until going right here, June 2010, where their index was 76.4. So yes, there was a slight increase of 2.5% compared to November, but current levels right now are more or less on par with June of 2010. A huge decrease in contracts being signed between buyers and sellers, despite the fact that we saw a small increase on a month-to-month basis here. And again, the first increase in the last 7 months. So here's another trend I actually noticed as well, because this decrease of 33.8% compared to December of 2021 is actually the third biggest year-over-year decline on record for data going back to January of 2001. In fact, the only months that had larger declines on a year-over-year basis was last October as well as November as well. And you can see that right here, because in October 2022 compared to October 2021, the index decreased by 37.1%, and last month it decreased by 36.9%. So this decrease of 33.8% seen in December was the third biggest yearly decline on record. One more thing I do want to mention regarding this information right here is that this pullback in home buying demand is pretty eye-opening, because we have approximately 70% more houses listed for sale right now compared to 1 year ago. So even though there's approximately 70% more houses listed for sale, we're seeing this giant decrease of contracts being signed compared to prior years. However, though, having said that, it's interesting to see that contracts being signed actually increase compared to November, an increase of 2.5%, something we should definitely follow in the months ahead. And of course, I'll definitely keep you posted, right? So some other signs regarding some early indications of home buying demand is based on the Mortgage Bankers Association, or the MBA's weekly updates regarding applications for people submitting applications for houses, or people submitting applications for loans in order to buy houses. So 3 weeks ago, this is kind of interesting to see this. I kind of have to step back a couple weeks here to kind of give you guys some context regarding this weekly update here. So 3 weeks ago, which is actually for the week ended January 6th, according to the MBA, mortgage purchase applications fell to the lowest levels since 2014. That was just 3 weeks ago, falling to the lowest levels since 2014. But fast forward 1 week, which was 2 weeks ago, this is for the week ended January 13th, applications for home loans to buy houses increased 25% compared to 1 week ago, but it was still down 35% compared to the same week 1 year ago. That was our update they posted 1 week ago on January 18th. Let's look at January 25th though. This is just published a few days ago. This is for the week ended January 10th of this year, or January 20th of this year, I should say. So their seasonally adjusted purchase index increased 3% compared to the previous week, but it was still down 39% compared to 1 year ago. This means their purchase index has increased for 2 consecutive weeks. Again, increasing approximately 25% 2 weeks ago, and last week increasing by 3%. According to Joel Kahn, who's the MBA's Vice President and Deputy Chief Economist, he stated that mortgage rates declined for the 3rd consecutive week, which is obviously good news for potential home buyers looking ahead for the spring home buying season. Mortgage rates on most loan types decreased last week, and the 30-year fixed rate mortgage actually reached its lowest levels since September 2022 at 6.2%. overall applications, which of course includes refis plus purchases. So overall applications increased with both gains in purchase and refi activity, but purchase applications remained almost 39% lower than a year ago. Home buying activity remains tepid, but if rates continue to fall and home prices cool further, we expect to see potential buyers come back into the market. Many have been waiting for affordability challenges to subside. I actually agree with him regarding this because if we continue to see a decrease in home prices as well as a decrease in mortgage rates, that could entice more home buyers to buy houses. In contrast though, if mortgage rates start to increase once again, that's going to decrease home buying demand, putting more downward pressure on home prices. Also in regards to mortgage rates, have a look at this because even though rates have decreased more or less ever since late October last year, rates are still approximately 2.5 percentage points higher than this time last year. So right now, the time of this video, which is January 27th, happy Friday to me, happy Saturday to you guys. Average rates are at 6.20%. This, by the way, is according to the Mortgage News Daily for people with exceptional credit. At 6.20%, 1 year ago, rates were at 3.71%. In other words, an increase of 2.49 percentage points compared to 12 months ago. So even though rates have increased compared to 12 months ago, it's actually kind of interesting to look at the differences in how much home buyers are saving on their average monthly housing payment or their future housing payment compared to the highs we saw for rates back in October and November. And I actually found a really good depiction of this showing the decreases in your potential average monthly housing payment compared to November compared to now. This is thanks to Rick Palacios Jr. I'm probably mispronouncing his last name, so my apologies, Rick. But he's a director of research at John Burns Real Estate Consulting. And he tweeted here, and this tweet was just about a week ago. He says here, home buyers got a boost in their purchasing power compared to November last year when rates hit 7% plus versus today's 6% rates. Combine lower rates with falling home prices, and you quickly get a boost for home buyers. This is really interesting. So look at this. This bottom line right here is home price decline assumptions since 2022 peak. So on a national level, home prices have decreased approximately 10% ever since June of last year. On a national level, decreased by 10%. Of course, every market's different though, right? In Austin, Texas, home prices have decreased approximately 21% compared to the highs back in 2022. And in the San Francisco Bay Area as a whole, home prices have decreased approximately 30% compared to the highs back in 2022. But on a national level, again, down 10%. So here's what you're looking at here. This area right here, which is the blue shaded area right here, or blue bordered area, is a change in your monthly housing payment due to the decline of home prices from their peak of 2022. So assuming this assumption here, by the way, this assumes a home purchase of $475,000 when rates are at 7.3% and a 5% down payment. So because home prices have declined by about 10% ever since last year, that causes a $270 per month savings for potential home buyers because home prices have declined by about 10%. And by the way, if assuming a decrease of 15%, that saves that person buying a $475,000 home, putting 5% down, $405 per month. But here's this, I'm only gonna be focusing on this 10% decrease because this is the national levels that we're talking about here. So because home prices have declined from the peak down 10%, that's a savings of $270 per month. But let's look at this though, because rates have decreased from approximately 7.3% to approximately 6%. That savings is $387 per month. In other words, big picture here, because home prices have declined, as well as mortgage rates decreasing from the highs we saw in November, and this equates to a monthly savings of approximately $657 per month because home prices as well as mortgage rates have been decreasing. Therefore, in this scenario right here, your average monthly housing payment would be $2,428 per month. And that's a 21% decrease compared to November's highs. back in November, because home prices were higher as well as rates were higher as well, your housing payment would be $3,085. In other words, a decrease of $657 per month. So here's the big question. Is this enough to entice home buyers to buy houses? This decrease in home prices as well as mortgage rates, will that increase home buying activity? Here's what we do know. We did see an increase compared to November in contracts being signed, up by 2.5% according to the National Association of Realtors. We're also seeing 2 consecutive months of increases of applications of loans to buy houses. However, though, compared to 1 year ago, we're seeing huge decreases of applications as well as pending home sales as well. So in my personal opinion, we're seeing some very early signs that home buying demand may be potentially increasing. However, though, compared to 1 year ago, we're still at very much low levels. Here's something else we also know as well regarding some early indications of home buying demand. This was actually posted by Redfin on January 26. They say here that pending home sales fell 26% year over year during the 4 weeks ended January 22nd, the smallest drop in more than 3 months. Pending home sales began rising on a month-over-month basis in December. So in other words, even though we have approximately 26% fewer contracts being signed between buyers and sellers, this is actually the smallest drop in more than 3 months. On top of that, according to Redfin's Home Buyer Demand Index, that actually increased 6% from 1 month ago during the 4 weeks ended January 22nd, but it was still down 29% compared to 12 months ago. And of course, this is an index which measures a request for home tours and other home buying services from Redfin agents. Additionally, here's something we also know as well, because back in December, according to the National Association of Realtors report, which is called their NAR Central Lock Home Showings report, on a national level, home showings were down 20% on a year-over-year basis this December compared to December 2021. Showings declined in every region in the US. It declined by 30% in the Northeast, down 33% in the Midwest, down 19% in the West, and it decreased by 12% on a year-over-year basis in the South. And of course, this is based on real estate agents showing their home buyers homes for sale in the US. And here's another early sign of home buying activity here. This is based on the US Census Bureau's report that was just published a couple of days ago regarding new home sales in the US. Which, by the way, the Census Bureau defines a new home sale as a contract being signed between a home builder as well as a home buyer. So on a seasonally adjusted annualized rate, there was 616,000 brand new home sales in December, and this is actually the 3rd consecutive month of increases of new home sales in the US. However, having said that, even though home sales have increased for the past 3 months in a row, home sales are down approximately 27% compared to 12 months ago. Also, when you zoom out over the past 5 years, look at this. The current levels right now at 616,000, again, a seasonally adjusted annualized rate. When looking at pre-COVID levels, this is actually the lowest levels since January of 2019, when at that time there was 599,000 brand new single-family home sales. So to briefly summarize today's video, we did see a slight increase of 2.5% on a month-to-month basis regarding contracts being signed between buyers and sellers based on the National Association of Realtors website here. Also, we're seeing an increase of applications for home loans increasing for 2 consecutive months, but we're still down approximately 39% compared to 1 year ago. Also, I should mention as well is that even though we saw an increase of 2.5% in contracts being signed between buyers and sellers in December, we're still at the levels we saw back in June of 2010. And also, even though home showings in December were down compared to 12 months ago, we're seeing an increase of new home sales for the past 3 months in a row. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. And of course, I appreciate you. Hope you guys have an awesome day. I look forward to seeing you on the next video.